Hello everyone, welcome to Full Circle Trader. I hope everyone is fine and healthy. So if you are new on the channel, what we basically do here is we use multiple technical concepts to analyze the charts and markets because we believe that when these technical concepts come together, they form a picture of an opportunity. So to understand these concepts well, please follow the channel and watch the complete video. Now, this video is going to be very interesting, particularly because if you are someone who trades intraday, if you are someone who likes to, do the day trading on a daily basis and you trade in Nifty and Banknifty. So in this video, I'm going to share how to read the candles properly and how you can find the opportunity without entering into the wrong trade. So this is going to be very interesting. So therefore, I request you to please watch the complete video. Now, as you know that as one of the technical concepts, we use multiple time frame analysis. So before we go into the 5-minute time frame, which is our trading time frame in the intraday trading, we take a reference from the 60-minute time frame. Let us see that what has happened yesterday, and then we will move on to the 5-minute chart to see how to find the opportunity and how to take the trade in the right direction. So if you look at the 60-minute time frame, the prices were open right at the support area. So let me just do one thing here. Let me just change the color of the support so that we will not get confused here. Yes, so the prices, at the open, this was the first candle and we open right at the support. So this means that, whenever prices open very strongly on the support, that means that, buyers are very active and aggressive on that day. And if you can see, this was the wide range bar, as we call it WRB, and you know it if you are following the channel. And after this WRB, we have upper consolidation at the upper 1/3 of the wide range bar. So, all in all, in the morning, it sets up a very bullish price action, a very bullish environment, and it gives us an indication that today it is the time to take the long trades. However, no, we are not going to just summarize everything right now. We will go to the 5-minute time frame and see how the trading sets up, how the pattern and the price action sets up, so that it represents a good opportunity in front of us, and we will enter into the right location. So with this time frame, with the reference of this time frame, let's move on to the 5-minute time frame. Let me just clean this up. Okay, so if you can see, I have marked some numbers here. So now we will see and analyze each candle, each bar, and understand that how to find the opportunity when we are trading intraday. So as I mentioned, this was the plus wide range bar, which means the plus sign here means it's a bullish wide range bar, which means that, prices when open here, they open right at the rising 200 MA, right? And this is a very important incident. And as an intraday trader, we should not ignore it, because when it opened on the rising 200 MA, it moved down below, but then it immediately came back up, and that shows the power of the buyers, right? But then what has happened is, after this wide range bar, we have the upper consolidation, which is again a bullish indication. We will also have the breakout. Now, this is where I have marked this number 1 here, which indicates this bar here. This bar here, this indicate this is the first breakout that it has given. Because see what has happened before this bar. Let me just a little bit zoom it out so that you can see it very clearly. This was the first breakout bar. But what has happened is, Before it, we have wide range bar, we have the consolidation, but all that has happened below the daily resistance area, which was 17,400, right? So daily resistance on 5-minute time frame is a very strong resistance and we cannot ignore it, right? We have to take this into consideration by taking the long trades. Also, if you look at the moving averages, particularly the 50 MA and the 20 MA, when this breakout happened, we were not having the right alignment of the moving averages. The 20 was below 50. Whereas if you've been following my videos, I have many a times mentioned that for the bullish setup, the right alignment should be that 20 should be above 50 and 50 should be above 200. So this is our 20, this is our 50, and this is our 200. So MAs were not aligned properly. We have a very nice breakout. The setup was very nice because it tells us that bulls are aggressive right at the open of the market. But because we do not have the right setup, it is not advisable to take the long trade at this candle or at this candle. So I'm sure that all those novice traders who don't understand how to read the candles, how to do the bar by bar analysis, how to take the references from the multiple time frames, they must have entered on the very first candle itself. Now there is no problem, particularly in this day. Why? Because this was a bullish day and prices keep on moving, but this doesn't happen all the time. It doesn't. If prices have opened on the 200 MA, it doesn't mean that we enter into the trade, we jump on the trade right away. No, as an informed trader, we should not do it, right? We should wait for the right setup to form. Patience is the key in trading. Never forget that. So that's about the first breakout here. See, then what has happened here? Then we have a very bullish momentum here. Prices kept on rising and they didn't give us any particularly, proper location except this candle here, where we could have taken the trade because, this was the resting bar or a consolidation bar in the lower time frame. Always remember, when you have a bottoming tail bar in any particular time frame, this bottoming tail bar is a kind of consolidation, range or a base in the lower time frame. But we have a very strong momentum and then we have consolidation. Then we have again a very nice breakout here. So let's just mark this one as well. So we have a very nice breakout and this is the second breakout. But, and we could have gone long above this candle here because, if you've been following the channel, I have mentioned that there is a pattern called 1, 2, 3 pattern or plus 1, 2, 3 pattern. Whenever I use the plus sign, it means it's a bullish pattern. In this pattern, we have the wide range bar, a resting day, then the third bar that takes out the first wide range bar and the resting bar. And this is basically a breakout bar. But, we do not have that kind of pattern set up here. We have a very nice, breakout that has cleared all the resistance here. It opened at its low, but closed at its high, right? That makes it a very bullish bar. Now the question comes that, if this bar is so bullish and so strong, then why it did not work? Why did it has not given a proper entry location, and why, most importantly, why did it came down? So to answer this question, to find out the answer, let's go to the multiple time frame analysis. Let's just clean this up here. Let me just delete this one as well. Okay, so this bar, this bullish bar has happened or formed around 11.5, right? And this is the bar at 11. So 11.5 here, which means that if we look at this in the 60-minute time frame, so this is the red bar, which is, you know, this breakout bar here, which means that it formed at, you know, around 11.5, and this was the time, you know, which has after, you know, this 10-15 bar, and between this bar, this breakout bar has formed. So why this breakout bar or a very strong bullish bar has failed? So to find the answer, just look at the left in the 60-minute time frame. We have the resistance here, right? Let me just zoom in. We have a, you know, a small resistance here, and because of which, you know, even after having a very nice breakout here, it failed, right? So this breakout here was followed by this red candle here, right? See, this is how the multiple time frame, you know, come handy. Now let's just move on to the 5-minute time frame. So this was the reason that when this breakout bar has, you know, formed, we have the resistance to the left in the 60-minute time frame, and because of which, you know, this bar did not perform or did not, you know, give us a entry point here. Now, as an informed trader who uses these technical concepts, you know, it has saved us entering into the wrong trade. Now, all those who just trade based on one time frame, they must have entered, you know, above this bullish candle, which means that at this candle. And if they have, you know, keep their stop loss at the 50% of this bar, or even at the below of this candle, their stop must have got hit, right? Now let's just move on from here and see what has happened. Another important point that I would like to, you know, draw your attention to, if you think that because of this momentum move, this MAs have, you know, stretched little bit, you know, more from each other, then I will not call it, you know, that prices have extended, but yes, MAs have little bit, you know, stretched from each other, which indicates that sooner or later price will definitely going to come near to its average, and this is what has happened. But this is not an extended price movement, because this bar, this breakout bar has, you know, it formed just above the rising 20 MA. So I will not call it an extended bar, but MAs have definitely stretched a little bit because of the initial extended or initial momentum move here. After this, you know, we have this third breakout here. So this number has gone a little bit far from its breakout bar. So this is, let me just mark it. So this was the third breakout bar, which has happened here. Now, if you look at this bar, see what has happened. It has again cleared all the resistance here, and it has given a proper breakout. And now if you take the trade above this breakout bar, we can keep our, you know, stop loss here. Now we have to give a little bit more room for the stop loss here, because if you will keep stop loss just below it or even here, there are chances that, you know, the stop loss will get hit. So always try to, you know, put the stop loss at the nearest lowest low, or the below of the lowest low bar. So lowest lower bar is this one here, which is near to this breakout, right? So we have this breakout bar here. Now, if you argue that if we take the trade at this breakout, then we have the resistance again to the left. But then what about this resistance? So let me tell you that, you know, when the setup has formed here or here, you know, the scenario was different, and when things formed again here, it was a different scenario. Why am I saying this? This was the first move, and, you know, in the morning the prices are more volatile. We have the very strong resistance. We were below the daily resistance area. The averages were not aligned, and that makes this breakout here a not tradable breakout. When we have this second breakout, this was a kind of nice breakout, and we could have gone long above it. However, if we use multiple time frames as a technical concept, we know that the odds of this breakout working out is less, because we have the resistance in the 60-minute, and 60-minute is a very powerful time frame if you are trading in the 5-minute time frame. However, when this breakout has happened, we already have the two failures here, and prices did not move below, which means that we have this breakout did not happen, but instead of prices pulling back and moving down, they just consolidate at the lower end of this breakout bar. This means that buyers are here, which are ready to buy the market when the prices come down. Most importantly, if you look at this bar here, let me just mark it for you, because this is an important bar to show you all. When this bar has happened, just understand that what has happened in this bar. This bar open here, right? So which means that we have this strong selling bar, which try to move up, but then it failed because we have the declining 20 MA, and this bar failed. And then we have this gap down bar which opened somewhere here. Now imagine that if this market is live, and when you see this selling bar which has taken out all the support to the left, this tells us that it is a very nice bar to short sell the market. And all those uninformed traders who are not reading the market bar by bar, they will definitely have gone short below this bar, or when the prices gap down here, they definitely have shorted the market. But prices immediately came back up, making it a failed bar. As a technical concept, we call it gap and reversal. So this is a gap and reversal pattern here, right? And after it, they did not give the sellers any opportunity, and if they have keep their stop loss here, this breakout has taken all those stop loss, cleared the resistance, and that's make it a very strong breakout. And we should take the trade above this breakout bar, keeping a stop here, and this is a very nice pattern, very nice movement, and we can trail it. So after taking the trade above this breakout bar, we have little bit of prices wiggling around, but then we have a very nice up move here. Now the second question comes that if you keep your stop loss here, and if let's say prices starts to move up, then where will I keep my stop then, or where should I shift my stop loss then? So there are two ways to trail the stops. Either you can trail your stops below every lower low here, or if you have very strong momentum, and after the momentum, if you have very strong wide range bar, you can keep your stops below every bar here. And if you have a wide range bar, probably you can keep your stop at the 50% or at the upper 1/3 to save your profits. Either you can book partial profit here, or you can completely take your money off the table and just come out of the trade. So this is how you should read the chart when you are trading intraday, because intraday many a times, and especially in the instruments like Nifty and Banknifty, prices do wiggle a lot. They do move back and forth a lot. So if you don't know how to do the bar by bar analysis, how to take the reference and clue from other time frames, you will not be able to take the trade in the right direction, and there are chances that you will get a stop out. So hope you have liked this video. If you have any questions related to the analysis we have just done, you can ask it in the comment below. Also, I would request you to please subscribe the channel. Please like this video. If you are learning from these videos, please give it a thumbs up. That would encourage me to make more such videos. Please share it with your friends. And many people have asked me that which trading platform do I use. So this is a Fires trading platform. Fires is one of the fastest growing discount broker in India. So if you want to open your account with Fires, you can find the link in the description below. I have given the link there. Along with the link, I have given my referral code. You can use that code. And with that, let's just wrap up the session. If you have any questions, again, please do ask it, because asking questions will clarify your doubts. So till then, take care and catch you soon in the next session. Take care. Bye-bye.